Traders, happy new year, and I look very forward to sharing my first watch list of the new year with all of you, including entry and exit targets. Now, apart from a select number of small cap, low float stocks, where I'm predominantly short biased on, the watch list is going to be heavily skewed towards long intraday and swing trades in large caps. This is given the reclaim on Friday in the overall market and potentially a signal of a failed move lower comes a fast move higher in coming days and weeks. So starting off with large caps, first name on watch is NVDA. Now NVIDIA, of course, on a much higher time frame, as you can see, it continues to shape up and be a leader in its sector, in the market, and has displayed relative strength to its sector over the previous several months as well, namely if we look at the SMH ETF. Now back to NVIDIA, after retracing over 10% from its 52-week highs, it recovered with a nice high low above some converging moving averages. We got confirmation on Friday, that breakout providing really the best entry for a swing. But however, going forward now, the focus is going to be on seeing a higher low develop in the coming days, Monday, Tuesday, potentially looking for a dip into its 2-day VWAP, which is developing near 143.50, 145. So if we can get a pullback and a high low within this zone right here, that could provide a great entry for a long. And especially if NVIDIA continues to outperform the sector in the short term, see some relative strength and also see some flow coming back and rotation coming back into semis overall. And a stop there would be against the low of day. A reminder, NVIDIA is presenting at CES on Monday with a keynote. Next up, we have Amazon. Now, Amazon, it's for me not always the easiest of stocks to trade or even manage from a swing perspective, but really from a technical perspective, it's shaping up very well here in my opinion. After turning prior resistance kind of near this band of 220 into a support zone now. It's also formed a bullish formation with Friday's high, as well as the 20-day acting as resistance and a potential breakout level. So if the stock can break above this zone and hold above convincingly, that's where I'm going to look to enter long for a swing with a stop near the low of day initially, before being trailed. Next up, SMH. Back to the theme with NVIDIA, as previously spoken about earlier. Now the sector ETF, for almost 6 months, even if we zoom out to a higher time frame chart, 3 or weekly, you can see for almost over 6 months, it's been consolidating right at several key converging moving averages, and as well with several of its top holdings on Friday beginning to perk high and break out of significant consolidation and bases. So for me, this would be a more extended hold period, potentially up to 2 weeks plus, and I'd be targeting several ATRs to the upside if this trade and idea really materializes. Now first, I want to see a rotation back into semis. I'd like to see some positive inflows. Second, I'd like to see some of the leaders within the sector continue to outperform and display relative strength to the overall market. I'd also need to see SMH start to hold firmly above its most short-term area of resistance around 254. If we can base above 254, that's where I'd look to get a starter position versus 250, so almost an ATR stop. And then I'd look to add, if we can break and hold above 255 with a bit of an increase in volume in RVOL intraday, initially targeting a 1 ATR up move towards the next area of resistance near 260. At that point, I'd take a little bit of risk off. I'd begin trailing my stop, and then I'd be looking for 2 ATR up move towards 270 as we come into this previous gap down and as we come into a potential area of supply and overhead. Then just some additional large caps that I have on watch. These are names that coming into the week I'll have a bunch of alerts set for, and if those alerts go off, then I might prioritize some of my energy and focus there. So Reddit, several weeks consolidating near its highs. We had range expansion and an uptick in volume on Friday, and we closed, of course, right near the critical 180 area of resistance and breakout. So I'll be watching Reddit going forward for potential continuation. Next up, VRT. We had higher low and a close above converging moving averages on Friday. So this confirmed for me a higher low within this uptrend. And so this is just on watch for a pullback into these moving averages, into a developing 2-day, 3-day VWAP as the week progresses for potential high-low entry and continuation to the upside. And then second to last with the large caps. We have Alphabet, we have Google. Just from a technical perspective, nice consolidation, previous highs, area of resistance turning into support, consolidating near its 20-day and 5-day moving average. We finally poked above that range and closed right above that 5-day moving average on Friday. So I'm going to be watching this for just some continuation and ability to hold above 191, 192s. And if we can start to firm up and get an intraday uptrend, a considerable uptrend on elevated volume, I might look to enter a long position there for a potential swing. It still needs to develop though. Now, shifting gears, let's look at small caps. First one being NITO. So NITO had a very impressive 2-day run, immense volume, but for me the shift to the backside begin taking place and occurring on Friday with multiple squeeze and exhaust attempts through $3, and then a bit of a weak close in the after hours. So going forward, I'm going to be looking for that overhead resistance and supply to remain heavy and hold firm, which would then confirm backside and shift in momentum, of course barring any raise or offering. So if the stock can push back into its 2-day view up on Monday, or developing 3-4-day view up as the week progresses into 250s, high 2s near 3, and fail considerably and then hold below the intraday volume weighted average price and remain heavy, that's where I'd be looking to short versus the high of day for some continuation lower. Obviously erring on the side of caution given the recent theme within small caps. If we do get a day of consolidation or 2 days of consolidation in the low to mid 2s, I'll be certainly aware of the potential for a liquidity trap and squeeze higher. Next up is KITT, KITT. Incredible move on Friday, some exceptional long momentum, long opportunities, and then of course we got a huge squeeze out and blowing out some stubborn shorts in the after hours. I think it likely exhausted most shorts intraday from Friday, but with that being said, it all depends on where this is able to open up on Monday. At these prices, however, I'm no longer interested in momentum longs as I was on Friday, rather leaning towards the short buys, but I'm not going to blindly short this name. It's a wild mover, a lot of range. Instead, I'm going to be looking for any failed follow-through setup. I'm going to be looking for any blow off top, any push potentially through 5 and stuff early on Monday, any lower highs, any hold below view up consolidation breakdowns, etc. Any shift in momentum and change of character as it relates to price action. And then FCUV on a very similar note. Ideally, this opens close to where it closed in the after hours on Friday. Maybe we'll get one gap up early morning, 4-5 a.m. special on Monday. But essentially at these prices, same as KITT, not looking to go long, instead shifting my focus to potential failed follow-through short setups. And then lastly, just 2 potential liquidity trap scenarios. First one being in EDBL, immense volume pullback, and we've spent over a week consolidating now, with 36s, 37s being a potential trigger, aligns on multiple time frames. So I'm just keeping this one on watch for a potential liquidity trap, and similar fashion to that, CGBS for a potential liquidity trap as well, which has been a theme lately in small caps. So keeping both of these on watch, alerts set, and looking to be reactive if volume comes in and we're able to hold above VWAP intraday. So that's everything that I have on my watch list for the upcoming week. Several other names, but not worthy yet of being mentioned. Just a bunch of alerts set all around, and we'll see how the week develops. Let me know what you have on your watch list, what your top ideas are, what your plans are, or maybe you have any conflicting plans to some of the names that I mentioned. So drop that in the comments below. As always, I'd love to hear what your plans are and your thoughts. Good luck for the week, and I'll see you all next week.
So you're an active trader, not doing as well as you want, not doing as well as you deserve, and you just can't figure out why you can't become profitable no matter how hard you try. Well, let me show you why. This is your competition. The traders in this room. This room right here is full of elite traders. Some of them are making 7 and even 8 figures a year. In fact, our top guys have made nearly 20 million each in net trading profits in a single year. Let's head to my office so I can share more. So you're probably used to seeing videos of lavish trader lifestyles, trading gurus trading off of a laptop for an hour a day, heck, maybe even 15 minutes a day. and then them relaxing on some secluded beach for the rest of the day. Well, all I can tell you is that our traders train like pro athletes. They live and breathe the markets and are continually working on their trading skills. Because at our firm, that's what we found it really takes to make it in this game. I'm Mike Bellafiore, co-founder and managing partner of SMB Capital, one of the world's top proprietary trading firms located in Midtown Manhattan. And we're always looking for trading talent to hire and develop. And not just to trade in-house on our desk, but also to trade from their own home, entirely using our firm's capital. And we have numerous traders doing just that, allowing them to make upwards of 7 figures trading the firm's capital without risking their own money. But to even get a shot at something like that, you need to have the right training. That's why we're doing a new free online presentation in which we share how you can get an interview with SMB to become an in-house or remote trader, trading firm capital without risking yours and gaining access to all of our firm's coaching and resources. And the best part, you don't have to be a profitable trader yet. In fact, we prefer to mold profitable traders with our methods and our techniques. That's why we have just 3 simple criteria that can earn anyone an interview. We're looking for highly ambitious and determined traders who fit our culture first and foremost. So if you believe that could be you, sign up for the free 1-hour online presentation by clicking the link that's in your top right corner of your screen now.